You know, the global markets are buzzing right now. There are these two huge shifts happening, and they're sending some serious ripples all the way here to India. So if you've got money in the Indian market, you're going to want to pay close attention. Let's break down exactly what's going on and what it really means for you.
So let's start with this number, 16%. That's the recent gain in the S&P 500, which is a massive deal for the US stock market. And look, this isn't just a tiny little jump. This is a real signal of a global market rally, and it's being driven by some pretty significant stuff happening behind the scenes.
Okay, so a global rally is happening. Great. But what does that actually mean for your investments right here in India, right? This isn't just some far-off news from Wall Street, you know? It has direct consequences for your money, and we're about to connect the dots.
To really get what the impact is, we first have to look at what's fueling this fire. There are basically two main engines driving this whole thing, and we're going to unpack both of them right now.
So on one side, you've got a major diplomatic move, the US-China trade truce, and on the other, a big policy shift from the US Federal Reserve. Both of these are creating this wave of good vibes and positive sentiment that's washing over markets across the globe.
Let's kick things off with that trade truce. I mean, for years, this whole trade spat has created so much uncertainty everywhere, but now we're finally seeing a major shift.
And here's the bottom line. There's a one-year agreement in place that's dialing back those economic tensions. By cutting tariffs, it just helps clear the path for smoother international trade, which is fantastic news for the entire global supply chain.
And hey, don't just take my word for it. As market analyst Fabian Yip points out, this isn't just talk. We're talking about a real policy change that's giving everyone a temporary reprieve, and that creates a much more predictable environment, which, as you know, is something markets absolutely love.
So how does this all circle back to India? Well, with less friction in global trade, our export-focused sectors are really in a great position to get a boost. Industries like tech, pharma, and manufacturing could all benefit from more stable demand around the world. And that, in turn, just makes the whole investment climate here look a lot better.
All right, let's jump to the second driver and see how this all builds up. We're talking about the ripple effect from the US Federal Reserve, because when the Fed makes a move, believe me, the whole world feels it.
So the Fed recently cut its interest rate. What does that mean in simple terms? It means it's now less profitable to just park your money in the US. So what happens to all that cash? Well, it starts looking for a new home, somewhere it can get better returns.
Yeah, this is the perfect way to think about it. That rate cut acts like a giant magnet. It pulls global money away from the lower-yield U.S. markets and pulls it towards emerging economies with way more growth potential, economies just like India.
And this breakdown shows you exactly where that investment is likely to land. Our Indian stock market, especially the big large-cap stocks, usually sees the most positive impact. Our debt markets also get more attractive, and all this demand for our currency could lead to a stronger rupee. It's like a major tailwind for our markets.
Okay, so now we get the what and the why. But let's get to the most important question, right? What should your investment playbook actually look like now? How do you make the most of this?
Look, having a solid strategy here is absolutely key. Focusing on high-quality, large-cap companies that are already well-positioned for these global trends is a really good place to start. And like we talked about, the tech and pharma sectors are obviously strong candidates. But it's also so important to be properly diversified, both here and abroad, and to keep that healthy balance between stocks and bonds.
So let's make this really actionable. Here's what you can do. First, take a good hard look at your current portfolio. Does it actually line up with this new reality? Second, think about increasing your allocation to those export-heavy sectors we mentioned. Third, maybe look into some international mutual funds to truly diversify. And finally, keep a close eye on the rupee.
But of course, no opportunity comes without risk. And any smart investor is always aware of the potential storm clouds on the horizon.
It's so important to remember that the US-China truce is just temporary. Any renewed tension could flip market sentiment in a heartbeat. We also have to watch out for rising inflation and, of course, any surprise policy changes from central banks, both here in India and in other countries. These are the things that could definitely bring back some volatility.
And that really leaves us with the final, crucial question. It's one thing to position your portfolio to seize an opportunity, but is it also ready for the volatility that's bound to come with it? Finding that perfect balance between chasing growth and managing your risk, that's going to be the real key to navigating the times ahead